All right. Welcome to Dreams to Keys Realty on our YouTube and TikTok channels. I'm looking at YouTube right now and TikTok right now, so welcome on both platforms. I just want to welcome everyone to the platform. We're going to do what we usually do every live. We go live on YouTube and TikTok at least once a week. It may slow down during the holiday season as our business hours will also slow down a little bit to accommodate the holidays, but nonetheless, we'll get started. So as we do with any other live, I introduce everyone to the channel. So welcome to the Dreams to Keys Realty YouTube channel. I am Jalon Strong, the Essential Millennial Realtor, and I service DeKalb, Fulton, and Gwinnett counties of Georgia as a licensed realtor. So if you are looking for services in those areas for home ownership, such as buying, selling, or renting to owning a home, such as a residential property, then you can definitely contact us by going to our website, which is dtkrealty.com, D as in dog, T as in Tom, K as in kite, realty.com. And you can find our information in the description box or in the links in the bios. At the bottom of the screen of the YouTube channel, you can see moving about our link that is found in the link in the bios, which will get you to our consultation tab on that page, as well as other information for our site and as well. We'll start with our link in the bio highlight of the week that we have every week. And the week's link, the link in the bio highlight of the week for this week is Sophie. Sophie is a company or organization that helps with a number of different ways, such as helping to assist with student loan repayment or consolidation, and so many other things. If you have issues primarily buying a home because of debt and you need to consolidate, for example, your student loans, this could be an option for you to try. The way you would get to this tab is going to the link in our bios. So the link that's moving about at the bottom of the screen, which is also in the description box of the YouTube live for today, as well as the link in the bio on TikTok. And you will see the beacons.ai/Jalon Strong. Once you go there, scroll down, you will see the Sophie tab, which specifically mentions information about assisting with student loan repayment or consolidation. You click that link, it will take you to their page. Today, I'm going to actually present so that I can share with you what our link in the bio looks like and then what the Sophie page looks like as well. So give me just a second to do that. We're going to start with the link in the bio. So if you've never seen the link in the bio, you can become acquainted with it. All right, so hopefully everyone can see the link in the bio. This is what it looks like when you click the link in the bio from any of our platforms. It will take you here. So it introduces myself. It shows the social media links that we have, the icons. You can also email from here. So those things are available. So when I mention to TikTok in a little bit later, that you can go to the link in the bio and click the YouTube icon to get to our live today, or for any replays. I'm suggesting that you come here and click this icon here for YouTube so that you can go to our channel. Once you get there, of course, please like the video, subscribe to the channel, and hit the notification bell so that you can be notified each time we go live or post any information here. It's just a breakdown of the services that I provide. And also there's a lot of things here. There's some downloads. There's different things that we've covered in the link in the bio highlights of the week for various weeks, but you'll see there's a free download here for junk removal for a $50 gift card, there's ebooks, there's so much here. So take some time and just scroll down. But for the sake of time, I'm going to go all the way to our Sophie tab. So you can see there's a lot here. There's a wealth of resources and information that can be sparked from here. But this is where we want to go for Sophie. Get ahead of student loan debt. Sophie has options for repayment and refinancing. And once you click that, it takes you to the Sophie site. And hope okay, so YouTube looks like it's delayed a little bit from StreamYard, but this is where it will take you. And of course, to get connected, you can start putting in your email. If not, you can cancel out of that. And I'm going to actually scroll down just a little bit because on their main page, they have some information about different services they provide and how you can get started from their page with that. This is one of the benefits from being a member of the National Association of Realtors that I can get this access to this website. So please utilize these resources if you need them. And what we're going to focus on is student loan refinancing here. There's also private student loans if that's something you need as well. We would suggest that you go through your local markets. So if you're looking for realtor services through us, we have preferred lenders that can provide you information about local financing that could be more beneficial. But Sophie does have options there as well. There's other things, personal loan, checking and savings, credit, health, and insight. And we have information from our end as well through our resources such as ebooks as well as through our preferred lenders. But that is our highlight of the week. I'm going to stop sharing and we're going to get back to YouTube and get to our next topic, which is our free consultation. We offer free consultations at Dreams to Keys Realty at our website, www.dtkrealty.com. It is free. However, if you take a scheduled date and time and you do not show up, there is a $15 no-show fee. So make sure that you schedule a time that you can attend or reschedule it prior to that date and time so that you don't incur that fee. Because of this $15 no-show fee, when you schedule, you will be asked for your information to provide the funds should you not show up for the consultation so that the $15 no-show fee could be retrieved. But we want to make sure that we are utilizing our time and resources to those that are serious about home ownership. So we want to make sure that if you schedule that you're serious about this journey, that you are serious about being a homeowner in some way or getting on your home ownership journey so that we can really talk about those things in the consultation time. The next thing we will get into is the main thing, which is the title of this live. Lower mortgage interest rates could affect home buyers, and we're going to talk about how. So we're going to pull up an article and discuss that to pretty much lead us into our discussion today. From this article, we'll segue into other topics and maybe even bring up some other articles that come from other sources to kind of help feed into the conversation. As we're going along, please like the video, subscribe to the channel, hit the notification bell so that you don't miss anything that's posted here. Leave a comment, leave questions in our comment section. As we see them, we'll get to them, reply to them if we see them on the live, but we'll also get to them if we see them at a later date. Thank you for joining on TikTok. If you want to see what we're sharing live, make sure that you go to the link in our bio on our TikTok platform or profile, and make sure that you click the YouTube icon. That way you can see us live or even catch the replay and see the material that we're sharing and presenting on YouTube. Okay, so let's start presenting. Again, we're going to go to the article that we're going to read. And it's not a long article, and we'll also reference other material. Hopefully you all can see this. I'm going to just make sure from the other end. Okay. So this is an article from CBS News. The title is 3 Big Risks of Waiting for Mortgage Interest Rates to Fall. The article was written by Jessica Walrack and edited by Angelica. I'm not sure how to pronounce that last name, so I won't butcher it. And it was last posted or updated October 10th, 2024 at 10:41 a.m. Eastern Standard Time. All right, so this is what we'll be talking about today. Like I do with any other article that we've covered on this platform, I'm going to read the article. We're going to discuss what that means, and I'll discuss my perspective as a real estate agent. I'm not your real estate agent unless you become my client through documentation and a consultation. So a lot of things have to happen for me to be discussing something specific to you, which I wouldn't do across a YouTube live or a TikTok live, but that's how you become a client of mine. Now, you all can be customers and we can talk about different things like that. But as far as specific advice, this is not the way you get specific advice from me. This is more of a general overview and just perspective. So this does not make me your realtor, just so we're clear. All right, so looking at the article, over the past year, mortgage rates have been on a downward trend as inflation cooled, and rates dropped even further over the last few weeks as the market anticipated the Federal Reserve's next rate cutting cycle. With the first rate cut now official, the average 30-year fixed mortgage rate is 6.25%, down from a peak of over 8% 1 year ago. Let's stop here. So there's a couple of things that we need to know. One, I'm sure many people know when the rates are dropping. I think a lot of people may pay more attention to the rates than any other number when it comes to real estate. And then everything else kind of comes from the news media about inventory and what type of market it could be. And like I say any other time, that's information that if you want to know about your specific market, you have to talk to an experienced real estate agent or realtor in that market to get that information. That's not something you can get from the general consensus of all states and all markets. But here we're seeing that we're discussing the downward trend of the rates, and we're seeing that there was a peak of 8% about a year ago from when this article was written. And this has been some time, about a month ago now from this article. So we see that we're also discussing the average of 30-year fixed rate mortgages. Is this the only mortgage option that you could have? No, but most of the time when we're discussing the rates as far as Fed rate cuts or things of that nature, we're discussing the 30-year mortgage rate. Often it's a fixed rate that we're discussing as well, not something that's adjustable. So here at this time of this article, it was referencing the 6.25%. Couple of things I want us to know just offhand, and I'm going to also reference that in the description of this YouTube video, you will see some other articles mentioned below. One of them is from the National Association of Realtors, or NAR, and their website with an article that talks about the upcoming rate cut, 5 things homeowners should consider. So when we talk about, and actually I have that, so we're going to pull it up really quick. I'm going to stop sharing this one really quick so we can pull up the NAR article. So hopefully you all can see it. I'm just going to make sure that everything has caught up. Okay, so it looks like you can see it now. The upcoming rate cut, 5 things homeowners should consider. So I'm not going to read this whole article and the other one, but what I do want us to gather from this article is a few things. And I'm going to summarize it a little bit from my notes. So that's what I'll be looking for or looking at. So the article here that we're looking at from NAR's website is from September 10th, 2024. And it pretty much mentions that the Fed rate is impacted by a lot of things. A lot of things are impacted by Fed rate, should I say. So it's more than just mortgages, even though a lot of us look to that to say, oh, that means that it's going to be more affordable for me to get a home, because we think in general, or as a person that may not be as well versed on what the Fed rate impacts, that person may think that it's just impacting the mortgage rates. Fed rates impact more than just mortgages. They impact a number of things, such as borrowing costs. So when you look at your credit cards, your car loans, personal loans, those things are also impacted by the Fed rate. Savings. So your savings account have some interest to them. Those changes in interest are impacted by Fed rates. Economy, so prices. The Fed rate, as it goes up, the prices typically go down because of the economic demand and restore on price stability. So there could be some inverse relationship with the Fed rate and prices. The housing market, like we said, we look at that to the Fed rate to help us see what's going on with mortgages and loan options or loan rates. But the federal government also is impacted by the Fed rate itself, because the federal government has total borrowing costs and debt that they need to assess for. So multiple things are impacted by the Fed rate. Fed rate changes can impact any area of the lending system. Anywhere money is being loaned, which incurs debt on the opposite end, there is an impact from the Fed rate process. Fed rates as of November 7th, with the last Federal Open Market Committee meeting, that rate was between 4.5% to 4.75%. So at the time of the article that we previously referenced, it was much higher. So the Fed rate now is looking to be between 4.5 to 4.75%. The next Federal Open Market Committee meeting is December 17th through 18th of this year, 2024. The Fed rate. So when we say Fed rate or Fed funds rate, what we're saying is that this is the interest rate that the U.S. banks pay one another to borrow or loan money overnight. So that's a definition that we could see from one of the links that's in the description box from Nerd Wallet. So the Fed rate is the rate at which banks loan or borrow to each other overnight. So think of that as the Fed rate or Fed funds rate. Also, we see, and if you were to review this whole NAR article or website, you would see that it references the Fed rate also typically mimics movements of the 10-year Treasury bond yield. The 10-year Treasury bond yield is the interest rate of the U.S. government that is the interest rate the U.S. government pays to borrow money for a decade. That's something you can also see referenced in the description box from the website from Investopedia. So the 30-year mortgage and the 10-year Treasury are impacted by the Fed rate. So you can see that they often have a trend between the 30-year mortgage and the 10-year Treasury. They look a little similar. And if you're looking at the screen right now on YouTube, you can see a graph where at the side you see the percentages or the rates. And at the bottom, or let's say vertically, you can see vertical or longitudinal, you can see the percentages or rates, and the horizontal line, you could see the years. So over time, if we're looking at the blue line, which is the 30-year mortgage, the red line, which is the 10-year Treasury, and the gray line, which is the Fed's rate, we see that the 30-year mortgage and the 10-year Treasury look pretty similar in movement. The 10-year Treasury is just a little bit lower than the 30-year mortgage. Hopefully everyone gets what I mean when I say that based on this graph. We see that the Fed rate in gray is sometimes much, much lower than both. And when we talk about movement of the market, what you may notice is that certain areas of our lending system, in anticipation of the Fed rate decreasing or increasing, may make adjustments to accommodate for that change in advance of the change being official. So let's get back to the article. I think I'm jumping ahead just a little bit of the article, so we'll get back to it. Hopefully with the defining of the terms Fed rate, 10-year Treasury yield, and all of those things that we kind of got an understanding. So as far as where we stand now, we are in a much better place with the Fed rate cut from this article being 6.25%, but also that the Federal Reserve Committee will also meet again in less than a month's time to reassess the Fed rate cut, where they're currently looking at 4.5% to 4.75% right now. So this article was some time ago, and since then we've seen more changes. If you're in the market for a new home, you're likely wondering what to expect next. According to the Fed's summary of economic projections, they expect to cut rates more over the next few years, reaching a 2.9% Fed funds rate by 2026, says Josh Lewis, a certified mortgage consultant at the Educated Homebuyer. But should you wait for rates to hit rock bottom in this cycle before you try to buy? Experts say doing so won't always work in your favor. And they have a link for comparing mortgages. One of them is one of our preferred lenders. So hint, hint, if you want to get started with our preferred lender, click the link in the bio and you can start getting connected with them. It's the same logo, the NAF logo from the link in our bio. So now we're going to get into the meat of what the discussion will be for this live. Welcome, welcome, welcome. His casket joined. Welcome, welcome, welcome. All right, so 3 big risks of waiting for mortgage interest rates to fall. While trying to time the market may land you a better interest rate, it can also bring additional risk. Here are 3 big risks to consider. 1, more competition. Inventory levels across the U.S. are still very low. With rates coming down, more buyers will enter the market, and with increases in buyer demand will come increases in competition, says I believe that Shatcher, branch manager at Fairway Independent Mortgage Corporation. Essentially, you're looking at a higher chance of bidding wars and rejected offers. So let's pause and just think about that for a second. So they're saying that in this article, one of the risks, if you're just waiting for interest rates to drop to a certain point, is that you're going to have more people that are in the market. Now, what that means for you when you go to make an offer is true. You may have more people to make offers on the same property that you want, and it could be a bidding war. It could be about the number that is being presented to the seller. On the seller's end, they may say, well, the highest offer is what I'll take. For you as a buyer, you may say, I have a pre-approval letter and I need to stay within that parameter. And also, I want to make sure that I don't overextend myself before I, move into this home so that I can have enough funds should I have other things come up. I want to have some savings and reserves, and I want to make sure that I'm not overextending my finances. And with certain loan options, you have the debt to income ratio to consider. So you want to make sure that you stay within certain parameters, right? You want to make sure that it doesn't cost you too much up front to where you have issues on the back end. More competition. You would have more people on the market because not just you may not be thinking that way, but there are so many other people that may be thinking that way. Then the market can shift from being a buyer's market more so, where the buyer is more in demand or in control of how the homes are selling. And it could shift to being more neutral to all the way of being a seller's market where the seller gets to say, well, the highest bid or the highest offer is the one that I'll accept, or the one that closes the fastest is the one that I'll accept. And then you have this competition where the seller is looking at, well, how soon can I close and how much can I get? if you're not prepared to get into that type of bidding war or be prepared to have your offer rejected because of things like that, then this could be a risk for you if you're saying that you are just waiting for the interest rates to hit a certain number. And we can talk about other options. And what you should do is talk with the financial advisor for this part of real estate, which would be the lender or lender's representative, who can advise you on strategies to help mitigate in the event or when the mortgage interest rates fall, so that you can still get into your home without having the constant warring bids or rejected offers. So more competition is a valid concern if you're just waiting for the interest rates to drop. So there's a map here to view rates, and I'm not sure how often they update that, so we won't click on that, but that's something that you can click on in your spare time if you choose to. Fewer concessions is the second point. With more demand, buyers will have fewer sellers offering concessions or credits for closing costs and repairs. If you're competing against other buyers for the same home, the best offer wins. So, similar to what we just mentioned, hello, Trina. Hello, welcome, welcome. Similar to what we just mentioned, if the seller is getting multiple offers, there's really little need or no need to offer concessions because there's someone else that probably is offering making a higher offer without the need for any additional costs to be covered by the seller. So in a market where it's more of a buyer's market, you may see more sellers say, well, I have a certain situation that I need to sell this home. It could be a variety of things of why a seller chooses to sell a home. And they may be on a time crunch, or they may desire to move out of the home by a certain time for whatever reason. And if they have just one buyer that's interested, that seller may be more open to offer concessions in that type of market. But when we talk about interest rates falling and more competition on the market, the seller may say, well, instead of getting one offer, I have 5 to 6 offers, and I don't have to offer any concessions because I could choose another offer potentially. So there is that risk of fewer concessions. If you are someone that was looking for concessions or looking for credits toward your closing from the seller, you may not see that in the situation where it becomes a seller's market or when the interest rates fall. So keep that in mind if that's something that you're considering. If you only want to buy a home when you see a certain interest rate based on the federal cuts, then that's something that you have to take benefit versus risk. Is it more beneficial to get the home now and talk with your financial advisor about options to adjust your rate at a later date? Or is it risky to just, or is it more beneficial or risky to wait until the interest rates drop and buy a home then, and potentially have to fight for that home with other home buyers? What is most important to you? For some people, having more competition is not a factor. They may believe that, I will get what I should have. And for some people, the constant rejection of offer after offer just makes the home buying experience not as pleasant. So what are you willing to endure? What are you willing to consider? What's more risky for you? All right, so the third point is higher prices. Home prices will likely rise as rates fall, according to Lewis, but he doesn't think we're in for another housing market frenzy like we were in 2021 and 2022. Lower rates are more likely to stabilize the market, increase sales, and lead to slow, steady price growth, Lewis says. So let's talk about this. We just talked about more competition, fewer concessions. So when you have sellers that don't have to offer concessions to get more offers, and there's more people that qualify for home loans, that seller may say, I want to put this home on the market for a higher price because it's worth more to this market. There's more people wanting this property. Now, as a real estate agent or realtor, it is our job to advise our client, seller, buyer, renter, whomever, on the responsible way to list the price. What the market says this home is worth. And you can also, as a seller, decide to get a valuation done to assess for the value of your property or the land it sits on or what have you. So there are strategies to help with that. But let's talk about what has happened already. Prices soared at one point when we were more so in a seller's market. And that's because more people were trying to buy. The sellers had more opportunity to say, these prices should go up. I should be able to get much more for this home because there's more people looking. And it's a supply and demand type of conversation. More people want it, there's a higher demand. The supply may not be there, so the price goes up. And we've seen in different news articles how people discuss inventory. And like I say, talk with the real estate agent or realtor who's experienced in your area where you would like to buy, sell, or rent to own a home, because that is who would best know or best be able to pull data about the inventory. It's hard to really take a global look at a market, whereas taking a more local look about where you want to live could be more beneficial for you and more direct for what you're looking for. It could be very discouraging and skewed to take a news article that says there's low inventory and then look at where you want to live, where you see there's more than enough inventory. And we've seen that in some of our reviews of the market, going county by county and picking a zip code. And we will do more of that in future lives. So if you would like to subscribe, you'll see that we have some upcoming lives going through data again about Fulton, DeKalb, and Gwinnett counties, picking those zip codes and seeing the inventory. And we discussed that in those lives. So if you want to check that type of information out, make sure that you, one, like this video, subscribe to the channel, hit the notification bell, and also you can click on those videos specifically and say notify me so that you're notified when we go live at that time. Let's finish this article out. It's almost done. Should you buy a house now or wait? With the above risk in mind, it is better to buy now or wait. Is it better to buy now or wait? Now, this is a recommendation from the person that we've been reading about throughout this article. And I don't know all of the specifics of this person, so this is their opinion and maybe their expertise, but we're also talking about what that means here. So this person is saying, I would recommend buying a home now with less competition and possibly getting more incentives from sellers. He adds that a $400,000 home you want to buy right now might be $450,000 next year. Have we seen that before in our market? I think so. I think so. So the competition does drive the price, like we said, supply and demand. And it says more about the market at that time. So based on what the market is saying, is it should be ideally based, that should impact how the home is priced. So when the market goes up as far as the demand, then you can expect that the prices go up. And if you're having an issue with affording a home based on price right now, and it's not that you don't have the debt to income ratio to match or you don't have savings, but you're just waiting on the interest rates, it may not be beneficial for you to just wait just for that, because you may be paying more on your loan because the home prices have increased. You can also consider refinancing down the road to take advantage of falling rates. Although doing so involves closing costs and taxes, the benefits can outweigh the costs in some cases. In states with low closing costs like California, refinancing can make sense with a smaller rate drop. States with higher costs and taxes on refinancing need a bigger rate drop to justify refinancing. So this is why I say talk with your financial advisor in this market, which would be your lender or lender's representative. because they can tell you what's worth the risk or not. Is there a benefit in buying now and refinancing later? Or is there another option outside of just flat out traditional refinancing? One of the examples of this is if you decide when you're buying a home to buy down points, and then you later decide to refinance. You want to discuss that upfront with the financial advisor, the lender or lender's representative, because they can help you see and they can give you information or the numbers to see the benefit or risk of doing both or either or. What they can help you see is if buying down the points in this example makes the most sense, or if you essentially are losing the benefit of the points that you bought when you refinance. Hopefully that makes sense. The gist of that example is to say, you don't want to put money into something that you later cancel out based on the option that you choose at a later date, just specifically looking at interest rate numbers. There are so many numbers to consider when you buy a home. When that lender gives you those loan estimates and those fee estimate sheets, you want to consider every number there. You want to know what those numbers mean and how they impact you. And let me just tell you, there's more numbers on there than just an interest rate. And you want to see what that all means for you and how that impacts you, especially looking at your monthly payment. How much would that impact your monthly payment? And also know that as the home prices go up in your market, that impacts your taxes. That means if you're especially using something like escrow, that monthly payment increases. So that's another impact that you have to be prepared for as a homeowner. There's a lot to be prepared for, and there are experts in the field that can help make sense of it for you, explain it to you. And for the sake of finances, talking with your financial advisor, which is your lender or lender's representative in the real estate process, is highly advised by us at Dreams to Keys Realty. Let's finish off the article. Further, whether buying now is right for you depends on if you find the right home and are in a good place to buy it. That means your finances are stable with solid savings and good credit, a secure job and relationship, and you plan to stay in the home for at least 5 years. So I'm going to stop sharing and we'll just discuss a little bit more. When you decide to buy a home, you want to make sure that you're in the proper position. Have some savings. On this channel, we have discussed different programs where if you save at least $500 to $1,000, you have enough for that program. Should that be all that you save? No. Keep saving. Savings in general is beneficial for you for rainy days or for different plans that you may have, including buying a home. But make sure that you have some type of savings. Make sure that you have stable employment. If you are someone who is an entrepreneur, so you don't have the typical 9 to 5, that is fine. There are options for you as well for financing. But what they're looking for as far as what a lender is going to consider is your stability. How much are you bringing in on a regular basis? What are your employment options, or what field are you in? Are you staying within that field if you have multiple means of income or multiple jobs? If you change jobs or you're thinking about changing jobs, talk with your financial advisor because certain changes impact your ability to receive approval for that loan. I would not advise that you change jobs or buy a car or anything until you have received your closing. And if you even want to wait until you get your deed, make sure that everything is done so that your loan is not impacted. The article mentioned relationships. One of the things that I would consider if I were you and you were looking to buy a home with someone is to make sure that that makes sense for you long term. I wouldn't recommend buying a home with a boyfriend or girlfriend. Buying a home with someone who you're committed to is something that would be more advised. However, just because you're married does not necessarily mean that both of you have to be on the loan. You may choose that just one of you buys this home if you have the ideas or the goal to invest or to maybe be bi-coastal, for example. One of you might buy one home, the other might buy another, but both parties have to know and be consensual about it. So there are a number of ways that a home can be purchased legally. Yes, we're going to talk about the law at each stage. And when you work with me as a realtor, we're going to go through the forms and we're going to break down what each section means and how that impacts you. And that's something that you should expect from every real estate agent or realtor that you work with. So there are so many factors that can affect the home buying process, but just know that you have resources available. We at Dreams to Keys Realty are willing and able to help, even if you're not our client, if you're someone that we need to refer to someone else who is a real estate agent or realtor or broker to help you in the purchase, sale, or even rent to owning a home. We would love to do that for you. And we've done that just this week for one of the callers to our business line. So there's so many ways we can help, and we hope to be of help. Are there any questions about this article that we discussed or anything that we discussed today on the live? If you have any questions on TikTok, definitely put them in the comment section. Put them in the comment section on YouTube. Let's see some likes, some hearts on TikTok, and let's see what else we can uncover before we get out of here. So we like to end things at about an hour, but looks like we might get out a little bit earlier. And there's a lot of football going on today, so I hope everyone enjoys that. Like I've said in previous lives, in the holiday season, we are on and off with our business hours. Our operations change during the holidays. So if you want to have a consultation with us, please click the link in the bio or the link in the description box that says beacons.ai/Jalon Strong. And from there, you can go to the tab that says Let's Talk. That's our consultation tab. Click that, pick a time and date that we have available, and we will talk with you about your concerns toward home ownership. We do not help with renting apartments. So if you're looking for an apartment, we would not be the office to call. If you are looking for home ownership, meaning that you want to buy a home of your own, if you are looking to sell a home of your own, or if you are looking to rent to own a home of your own, we would be able to assist you in that, even if that means we refer you to someone because you're not in our area. For example, you may be in a different state, a different location, a different county. We are responsible enough to tell you that is not a county that we service, but we'd be happy to refer you to someone who is experienced in that area. And we have done that from time to time, and we'd be happy to do that for you if that's something that you'd be open to. Should you be open to that, you would need to complete a referral authorization form with us, and then we can start looking for a real estate agent or realtor in your area and then make an agreement with them. And then we'll introduce both parties. So you to your agent or the agent that we're referring you to, and then you both can start your journey of finding that home or selling that home for your desires. Welcome, D-Man81. Welcome, welcome. All right, so hopefully that explains a little bit of how we're moving for the holidays. So if at all you're interested in any of our services, the main place you can go is the link in the bio, and you can directly go to our website, which you can click on in the link in the bio from different pages, such as our merchandise, which is linked in the bio. So you can see our Dreams to Keys Realty shirts, crew necks, and hoodies. And we have a sale coming up. So Black Friday is coming up, and we'll have a sale that we'll mention in our next live. So if you want to catch up on that sale and get that deal, it's going to be mentioned in the live so that you all will know what's going on. That's the benefit of coming to our lives. Now, if we don't have any questions, I don't see any questions, we're going to end things. Thank you all for coming to the Dreams to Keys Realty YouTube and TikTok pages. We will be live again next week. We will be talking about some of the data. We talk about market data starting next week. We will be covering Fulton, DeKalb, and Gwinnett counties over the next couple of days or weeks. And if you want to know information about those areas, you definitely want to come to that live so you can see it live and also get the Black Friday discount information. If there's nothing else, I will see you all in the next one.